Hello and welcome. You're watching Business Today TV. I'm Sakshi Batra and this is Market Today, a show where we share with you all the latest updates of the stock markets, also help you understand the sectors and the stocks that are buzzing in trade, and also an expert view as to how should you approach some of those buzzing stocks in trade as well. First up, a quick check of the markets at this point in time. Well, half time on and we are seeing a screen green, filled with green as far as the benchmark indices are concerned. 18,678 for the Nifty, up 70 odd points. 0.4% of an uptick, taking away from those closing gains from yesterday. Also, the Sensex hovering near 62,740 and uptick of 200 odd points right there. So 0.3% higher for the Sensex as well. In terms of the broader markets, the mid and the small cap indices, let's look at how they are trading. Well, they are in fact trading better than the benchmarks at this point. Almost 0.7% of an increase for both the small cap 100 and the mid cap 100 indices as well. The India VIX is down 2.5% at 12.5, so comfortable volatility levels right there. The advanced decline ratio clearly shows a tilt towards the bulls, with 39 stocks advancing as far as the Nifty 50 stocks are concerned, with just about 10 stocks in the declining zone. Some of the stocks that are hovering in the top line today as far as the Nifty 50 gainers are concerned are from the metals pack: Hindalco, JSW Steel. These are the stocks that are shining bright. Apart from it, it's the gas and the power majors too. ONGC and NTPC also up in the green. Eicher Motors follows suit, about 2% of a gain right there as well. On the losing side, you do have stocks from the FMCG basket that are dragging. So Nestle and HUL down in the red. Asian Paints from the consumption basket also seeing some cuts. Bharti Airtel down in the red as well. And ICICI Bank, the leader of the pack, also seeing some profits being taken off the table after having been in news for the last 2 or 3 odd trading sessions. In terms of the sectors, there's only one sector that's down in the red, and that's the FMCG basket. And you've been seeing the kind of names that we've seen on the downward list right there from the FMCG basket. Rest all of the sectors are up in the green, of course led by the royalty pack that has seen a sharp bounce from the consecutive days of decline that we've been witnessing over the last few days on the royalty pack. 1.7% of an uptick for that one. Apart from it, the PSU banking index also continues to soar higher. 1.5% of an uptick can be seen for this one as well. So it continues to see gains day after day. Metals pack shining bright, 1.17% of a move on the upside. IT space also buzzing in trade, over 1% gains is what you can see for that one. Auto space also in the green. So it's largely a screen filled with green is what you can see. Let's welcome our guest for the day. Joining in with me is Kranthi Bathini from WealthMills Securities, the Director of Equity Research there. Kranthi, welcome and thank you so much for taking the time out for this discussion. First up, a quick view on the markets, and do you see that we are out of that volatile zone and a range bound trade that we've been witnessing in the last few weeks, or are we still going to see some speed bumps before we see a rally on the upside now?
Actually, one thing is it's completely depends upon the how the global cues are that are going to pan out in the next couple of weeks. That
Yeah.
is going to take us to the new highs or consolidation phase. Of course, we had a decent consolidation last week, and post that, market formed a base, and market is in a perfect shape right now to try to take the advantage of the global cues right now.
Hmm.
Overall, we can see the broader indices is doing good. We are receiving a good amount of support from the mid and small cap space also.
Yeah.
Right now, the action is it's more about a stock specific action is going to be there in next couple of weeks, and
Hmm.
also ahead of the holiday season for most of the foreign portfolio investors, how they
Yeah.
are going to position next couple of days. That is also extremely crucial for Indian markets. Overall, markets are in a very good shape right now. Still, market gives any dip. Definitely, it's a buy on dips market, because last week, if you see, when markets are in a consolidation phase, it given a very good opportunity for the investors to cherry pick the stocks. And again, we are rallying right now. Uh,
Right.
Ahead of Federal
Absolutely.
Reserve meeting, we need to see the outcomes of Federal Reserve to get the clear cut indication for the market rally.
Absolutely, you're right over there. Will the Fed really keep the spirits high? Because we've already seen investors getting that inflation booster after retail inflation data. The WPI, or the wholesale inflation data, has also come in at 5.85%, which is a 21-month low. And after a long time, we've seen the WPI data coming in lower than the CPI inflation number as well. Of course, all eyes will now be on the RBI commentary and the RBI trajectory going forward. And some of that indication could also come in from the US Fed tonight and later in the markets will be reacting tomorrow as well on that front. But the stock that is on our radar today is Paytm. 197 Communications, the parent entity of Paytm, on December 12th approved a share buyback plan of 850 odd crore rupees, priced at 810 rupees per share. So to begin with, what do you make of the Paytm buyback news and the price at which the buyback is being done, also the issue size of 850 crores?
Actually, if you see, the stock got listed in last November 21 at a price of 2,150, and the stock is currently at the bottom of its price, and the uh, buyback where they announced at 810 rupees for a tune of 850 crores. So if I have to compare with the market cap versus the buyback offer, uh, if you take the overall market capitalization of 30,000 crores and 850 crores, that is 1% of the market cap, they're going to uh, announce for the buyback. So it is just trying to make some kind of damage control, and also try to just to pacify the investors in the medium term. But
Right.
overall, okay, I don't think so. It's going to create a major positivity with respect to the overall stock performance is concerned. That's why you can see market responding very neutral way for the
Exactly.
buyback currently at 530 rupees and the issue price of 2150 in November. So
Absolutely.
retail investors who invested during this phase, if they want to tender in the open offer, if they get, they can tender. Uh, and the remaining, nothing to worry at this moment at this price, because the most of the damage has been factored into the price right now. Uh, so they can stay on to the stock at this moment, because we have seen some kind of positive analysis and reports that coming with respect to Paytm is concerned. So currently investors can hold on and they can tender for buyback. If they get through, it's nice. Or else if the stock, one can hold on. But the fresh investors, definitely it's not a stock to venture immediately.
Right. I also wanted to point out, you said that the, share prices are trading muted. Usually it is always seen that a buyback is seen in a positive light from the company's end, that the company strongly believes in higher value of the company's shares, and which is why we are seeing a higher price than the current trading price of the share as well, as far as this buyback price is concerned. But the shares are slipping. So, how should investors really view this? Why are the shares really slipping?
Sakshi, if you see, the drawback for this kind of response from the market is, and the issue price is way above. Okay, it is at 2,000 rupees, and with just the buyback size is 850 crores. With respect to the market cap, with respect to their buyback offer, the matrix is not encouraging for the investors right now. So this is the reason, if a investor, there is no assurance that the investor will get 800 for all his quantum. If he tenders in the open buyback offer, there is no guarantee that they will be getting 850 rupees. This is the reason you can see the neutral response, or the stock is right now down around 1%. So this is the reason the buyback offer is not enthused the overall
Yeah.
investor fraternity.
Yeah. Also, since you pointed out, just to make it clear for all our viewers as well, the company has opted for open market route through the stock exchanges method for this buyback, which is likely to get completed within a maximum period of 6 months. What does it really mean for the existing investors holding on to their shares? Do they have an option for tendering their shares, or is there no exit option that the investors, current investors, can opt? Because what is the difference between the open market route and the other route as well?
Sakshi, if you see the overall, uh, when an investor is tendering in the open offer, so the quantum for the investors right now, if we see the actual capital of the company and number of the shares, okay, 850 crores buyback is a very small. So
Yeah.
there is no assurance to the investors they will be getting 850 rupees if I buy the shares today, and if I tender in the open offer for 850, there is no assurance. This is the reason the stock has not responded well. So investors are currently staying away from the stock after announcing this kind of buyback offer also for the investors.
Mm. Since this is the first buyback, I wanted your opinion on, do you see more coming in the future as well from Paytm?
We need to see, Sakshi, first of all, they need to set back their the kitchen well. Okay, they need to get into profitability. They need to increase their margins. They need to increase their cash on the balance sheet. Right now, they have a uh, cash around 8,000 crores on their books. So out of this 850 crores, they are spending for the buyback. But the overall market capitalization is concerned. Okay, they need to have strong cash flows going ahead, and also the margins and the earnings visibility should improve for Paytm to enthuse the investors, to reward the investors, rather than
Yeah.
going these kind of small buyback offers. This is the reason street is not enthused with the buyback offer right now.
Right. Kranthi, stay on with us. Let me take it across to my colleague Tanya Aneja, who's standing by to give us the data of how the stock has really performed from the time we saw the issue price, and what kind of wealth erosion have we seen, the kind of territory that stock has charted so far in this last 1 year. Tanya, take it away.
Absolutely, Sakshi. So Paytm made a week debut on November 18th last year. The script got listed at a discount of 9% at 1950 rupees on the National Stock Exchange against the issue price of 2150 rupees per share. So if you compare it with the current market price, the stock is down over 75% from its issue price and over 72% from its listing price. Now the stock has been beaten down lately with significant selling pressure after the lock-in period ended for pre-IPO investors. And ever since the lock-in expiry, investors have been diluting their stake in this company. So SoftBank Group sold 29 million shares of Paytm through a block deal. It held a 17.45% stake in Paytm, and after the block deal, its stake declined to 12.9%. Now, experts believe that maintaining high growth and profitability to justify the valuations will be tough for the companies like Paytm. However, foreign brokerage firm JP Morgan said that this 850 crore rupees share buyback announcement at a 50% premium will provide support to the stock price in the near term.
Okay, thanks Tanya for that information. Mr. Bathini, you were making a point on how the street will now go on to focus on the earnings and the growth trajectory of the company. While this may be a momentary positive, may support the downside or may limit the downside for the stock price that we have been seeing, but the way the company's measures are, how do you really see, and the way the company has also mentioned that they hope to become EBITDA break-even by September 2023. Is that on course, or do you see some speed bumps even there?
Sakshi, as Tanya rightly said, the buyback offer gives the protection for the stock from the current market volatility. But we need to see the next couple of quarter earnings, how the company is going to be profitable, and how the other segments of their business they're going to improve. These are the triggers, because when a stock got beaten down nearly 70% from its highs and the issue price, there is always a skittiness and a dichotomy with respect to the investors taking positions in these kind of companies. And as we call, these are the digital platform companies. Still, it is at the elementary level only, just to prove their metal going ahead in terms of the earnings. So one thing is, next couple of quarters, their earnings are extremely crucial. Of course, we have been listening the forward looking and the commentary from the management, but this is
Yeah.
the time they need to deliver in terms of their profitability is concerned, to again gain the investor confidence with respect to their stock price is concerned.
Right. But at this price, 530, does it merit as an opportunity for new investors to take a fresh look at Paytm?
Sakshi, as you said, okay, at this price, for and looking at the performance of the company and the segment they operate, this kind of companies are suitable for only high risk appetite investors. And I don't advocate people who have a very less risk appetite. It's not the stock, but definitely for a high risk appetite investors, given the downfall is limited for the stock, they can take some position with respect to Paytm is concerned, but not for the entire retail investors. It is only suitable for the high risk profile investors only.
Okay, let's move on from Paytm now and focus a little bit on the primary market space as well. Mr. Bathini, two IPOs are open for subscription as of now. Sula Vineyards, it's the day 3 for Sula Vineyards IPO. The total subscription has been 77% so far. The QIB portion is 18%. The retail portion has definitely seen better subscription, 1.2 times right there. For Landmark Cars, we've seen a total subscription at 28% so far. The NII portion at 70% and the retail portion has been subscribed at 26%. Also, we've seen K Fintech IPO getting announced as well. That is likely to launch itself on 19th of December. While that is a 1500 crores and a complete offer for sale with 347 to 366 rupees as the price band. From this current buzz that we are seeing in the primary market space, is there anything that interests you?
Sula wines looks very interesting. Of course, I need to make a disclaimer. I'm a non-alcoholic, but
I was going to ask you if you're a consumer as well.
so uh, bear with me in this thing. Okay, coming to the business model, it looks a very good business model. They have the real estate property values also in a nice way, and this is the segment that's going to go up. India with a very young nation, and the disposable incomes are going up with a very good management. Sula Wines is the stock to look into look into for investment. Definitely, investors with a long-term horizon, definitely they can subscribe for Wines, and the next couple of quarters results are extremely crucial for Sula Wines. With respect to Landmark is concerned, only high risk appetite investors only they can subscribe for this issue. But definitely, Sula is a uh, for the non-alcoholic or alcoholic as an investment. They can definitely subscribe for Sula Wines.
Okay. Since we're talking about this IPO space, there was a very interesting IPO that we had seen, not recently, but 40 years ago. I'm talking about Infosys. Perhaps the
Absolutely.
first major tech IPO that we saw in the stock markets, and that has created massive wealth for stakeholders, for investors over these last 40 years. I want to take your opinion, since today is the day when we celebrate Infosys' 40th birthday. How have you seen the journey of the stock from the investor's point of view, and does it still hold strong, for the future investors as well as a strong bet going forward from here?
Yes, actually, when it was started in 1981 and its debut at 1993 on the stock market, Infosys is the stock created phenomenal wealth for the investors and stakeholders for a long period of time. I can say in a single word, it's the stock for all seasons. Uh,
Hmm.
when there is a crisis on stock markets or in the economy or anywhere, okay, yeah, the long-term investors definitely is the stock for all seasons. Definitely, investors can participate in the growth story. Always gives a mid-teen returns for the investors, whatever be the price points they invest in. Definitely, the commendable effort by the management team led by Narayan Murthy, they have shown the strength of uh, Indian companies, the strength they demonstrated the India's uh, growth story and India's technology story to the world. Phenomenal, and these are the stocks are a, makes a uh, creates a new India, and I'm sure going ahead, India will create new companies like the same kind of Infosys status. Hope so. That's what my ambition and
Sure.
expectation. And for investors, one word: it's a stock of all seasons. Uh,
Yeah.
they can have this stock in their portfolio every moment.
Okay, so 0.8% of an uptick, 1584 as the current price of the Infosys right here. But interesting for all the viewers to know that the IPO in February 1993, in fact, came in at an issue price of 95 rupees, and the IPO was 13% undersubscribed. And thereon, we did see Morgan Stanley purchase the unsubscribed portion, and the stock thereafter listed at 145 with a listing gain of over 52%. And from that till now, you can actually see the kind of move that we've seen in the stock price. Well, thank you so much, Kranthi, for being with us on the show and discussing with us a whole lot of insights on the IPO space, the Paytm, the newly listed stocks, and as well as the upcoming over market trajectory too. Thank you very much. It's been a pleasure speaking to you as is always. The markets, let's get back to that and see how they are trading at currently. 62,730 for Sensex, 195 points up in trade, slightly volatile but remaining consolidating at this level. 18,675 for the Nifty at this point, just about 70 points up in the trading action right there. We'll keep an eye out on whether the markets are able to pull further from this level in the last 1.5 hours as well, because that's when we've been seeing the move really coming in, the last push really coming in for the markets over the last few trading sessions. So do stay tuned on to Business Today TV to get all the updates on stock markets and from the world of business. And also you can stay tuned with us via our other social media platforms as well, which means Facebook, Twitter, LinkedIn and Instagram. You can constantly engage with us. Many thanks for tuning in for now.